better to speak on the implications, not just for the oil and gas sector, but for the entire space from an Indian perspective than MK Surana, former CMD of HPCL. Mr. Surana, thank you so much for speaking with us. Tamanna here. Great to have you on NDTV Profit. Let's just start. Thank you so much, sir. Let's just start by understanding whether you think crude prices will stay at this peak. Is what we're seeing with Brent right now, in your view, a knee-jerk reaction? Because if it is, the impact should not be so much on downstream companies.
First of all, thanks for having me on your show. So let's, right now the situation is in the domain of uncertainty. So we can't say surely, but let's analyze in a scenario basis. There are three scenarios possible that either this issue which has escalated between Israel and Iran, it settles. Or the second thing, it remained constrained or contained within that zone only. And third, it escalates to engulf the whole of Middle East region. Now, structurally, if you see, there is no reason why the crude prices should be running above $70 because there is an increased supply of crude from the OPEC countries. Since last 3 months, they have accelerated the supply. So there is more supply in the market. And because there is a summer season and driving season, so there will be some increase in the demand. The China-America story is still having the issues which have a shifting stance on the everyday basis. So demand side, there is no specific triggers to drive up the price. So structurally, I don't see there is any reason why the crude prices should go above $70 apart from the geopolitical tensions. Now, as far as geopolitical tensions are concerned, definitely whenever such thing will happen, there will be a risk premium which will get built in, not only in the prices, but also the freight cost, the insurance cost, and also the speculation activities hikes up. So that is the reason which you are saying the sudden spike of almost 10% or so today. Now, whether it will stay at this level, it depends on how this thing comes. As I mentioned, in three scenarios, there may be different things. If the issue is getting settled, it should come down back to below 70. If it remains contained also, then I think there are lesser possibility of, though there will continue to be volatility, but lesser possibility of going beyond 80. But if it escalates beyond, then definitely it will go high. Now, come fourth quarter, I think by that time the summer season would have been over. If the accelerated supply continues, in that case, there will be all the 2.2 million barrels per day of supply would have been in the market by that time. And if the demand triggers are not there, there will be a surplus oil in the market. And therefore, the crude price should come back to 65 range by the fourth quarter if the geopolitical tensions do not give some different scenario.
What is the lag, Mr. Surana, before it starts hurting pricing for Indian companies? Because obviously inventories are built up in advance. So if you have prices at a steady 74, 75 where they are right now, say for the next couple of weeks, how soon does it begin to hurt margins for us?
So it depends on which coast of the country you are on. The west coast, it will be lesser time, but on the eastern coast, it may be anything between 30 to 45 days from where you are getting the crude supply, while on the western coast, it may be anything between, let's say, 10 to 25 days. But if you see the Indian situation, for quite some time, the prices were static in the domestic market on the pumps. And in spite of whether the crude prices were high or crude prices were low, and the government has managed it with increase or decrease of the excise duty. Now, if that is the situation, I don't see a change in the pump price in the immediate future if the crude prices are not going beyond, let's say, $80 or so. And because the margins on especially the MSHSD were reasonably good in the recent past, and there was a lot of clamor for reducing the prices, which has not been done to that extent. So I don't see that there will be increase in prices immediately unless the crude prices continue to be high for a substantially long time. And in that case, also government will have a way to manage the excise duty or reduce the excise duty because some election in some other states will be coming in the future. And government for a long time now, almost 2.5 years, has maintained the pump prices static. Also, with the RBI giving a heavy dose of liquidity in the market, government will be cautious of inflation part if the crude prices are going, if the pump prices are going high, because it will have a snowballing effect.
Mr. Surana, this is Harsh here. Please clarify if I have understood correctly, sir. Are you trying to suggest that the spike that we saw today morning was largely a knee-jerk reaction?
It is definitely a knee-jerk reaction. Whether that jerk reaction will continue will depend on how it pans out now.
Sure.
So if you see the history of crude oil, always the jump happens in a knee-jerk reaction only. When you would have seen the oil price going up suddenly from $60 to $128 and then coming back to $40 also. But knee-jerk reactions then comes down also quickly. So as I am mentioning that structurally there is no reason for the crude prices to be high. And definitely it is a reason for the risk premium. What you call is knee-jerk reaction. It is the risk premium which get built up in the prices. Because let's assume that if the crude vessels have a risk in passing through certain areas because they are under the turmoil or it is under the conflict zone, the insurance cost, the freight cost will increase. Second is that there will be speculation. A lot of paper activities also happens on that, which boost up the price. And it always moves in the direction of the momentum. If the prices are going up, the speculators will pump it further up. And if it is going down, they will beat it down further.
Mr. Surana, thank you. You've been extremely elaborate and you've been extremely clear with what you've said. So thank you for coming in, speaking with us.